Hi everyone and welcome to KRYPTALK, that Irish guy that talks about Bitcoin. So today we're going to talk about that Bitcoin debt cross and why it might not necessarily be a bad thing. Let's get started. This is episode number 44 and the title of this episode is Could the Bitcoin debt cross be bullish for Bitcoin? Quick look at the charts. Okay, let's get the basics out of the way. This is the Kraken chart. These are daily candles and Bitcoin is trading at $36,615. Down nearly $30,000 from its all-time high of $64,900. What's it doing at the moment? Nothing. It's been really boring. It's moving to the side. It's trading sideways. It's consolidating in between about $40,000 and $30,000. More accurately, it's kind of getting support on the 0.5 Fibonacci trading level, this green line here, and that's about $34,391. We've only had two candles, these two red bearish candles that have actually closed below that level so far, even with this 53% correction. Where's it going to go to next? Okay, that's what everyone would like to know. No one really knows. I don't know. You don't know. Bitcoin tends to do what it wants. But look, let's look at very quickly before we move on and talk about the debt cross, because that's why you clicked on the thumbnail. I know I don't want to waste your time. So if this was to reverse to the upside here, the next kind of level here, resistance level, would be the 0.618 Fibonacci level, which is about $41,500. And that's significant because it's so close to this yellow perforated line here, which is $42,000, which is the previous all-time high, one of the previous all-time highs. It acted as a support previously. Once he broke above it in February, it didn't fall below it for like 3 months until the 19th of March. So, I mean, it's going to be a tricky resistance level. You have to get above that before going on any further. Now, on the flip side, if it was to break down and break through this 0.5 Fibonacci retracement level, the next Fibonacci retracement level will be 0.382, down as far as $27,000. Okay, so we're going to get rid of this Fibonacci now. I'm going to talk about the debt cross. Right, so if you're into Bitcoin, unless you've been living under a rock for the last few weeks, you've been hearing a lot of YouTubers and reading stuff on the internet about the debt cross. What's the debt cross? Hasn't actually happened yet, but it will happen. I didn't want to talk about this because I thought maybe there was a chance that it wouldn't actually happen, that the lines would start trading sideways and then started diverging away from each other, but that's not going to happen. It looks like the debt cross is going to happen. We're going to outline why it's nothing that you should be worried about and why it's potentially a good thing. Okay, again, just my thoughts and opinions here. So we'll get rid of this part here and let's explain what it is. Basically, these two lines, this green line and this red line, they're called the 50 and the 200 daily moving average. So this is the 50 daily moving average and this is the 200 daily moving average. They're indicators. They represent trends and in averages. So this green one, the 50, represents the average of all the daily closes for the last 50 days. And then the 200 is a longer term one. It represents the averages of all the daily closes for the last 200 days. So typically, what a debt cross is, it's when the 50 crosses under the 200. Basically, when this green line is going to hit and cross under the red line. So just take a look a bit further. Look at the last year. You'll notice that the green line was above the red line. Basically, the 50 daily moving average was above the 200 daily moving average. Now, what's really important and what you're probably keen to know is what usually happens or what to expect if you are new. So we're going to go all the way back and we're going to find the last time we had a debt cross when the 50 moved under the 200. And it was here, represented by this red X. This green X is a bullish cross. That's the opposite when the 50 moves above the 200. We'll get to that. So I'm not too worried about the debt cross because it's a lagging indicator. Basically, it happens after the event or after the fact. What I mean by that is some sort of fear, uncertainty, doubt, or some sort of negative news that causes panic among Bitcoin hodlers comes out, people panic, they sell. That causes a cascading effect which causes more people to sell and more panic, and a waterfalls down and you get this sell-off. And then, because you have these daily candles, these bearish daily candles getting printed, that affects the moving averages and it causes them to react and basically, in this case, drop down and the 50 moves under the 200. So here you have the event, the bad news, and then here you have what actually happens. So it's a lagging indicator. It happens after. So we've already had a 53% correction. Can it get worse? Well, yeah, probably. But it's up to you. What do you think? I don't think it's going to happen. We might go down a little further, but like I said, I don't think we're going down as far as 10. I don't think we're going down as far as 20. I think maybe in around 30 we could have found the floor. So look at this. What happened here? If you had bought here, yeah, you would have had 3 days of bearish candles, but then it's been all upside. It's been all blue skies as far as here, which is the golden cross, and then it goes up to $64,900. Quick question. If the debt cross happens, how many days do you think it will take before we get a golden cross on the Bitcoin chart? Let me know in the comment section down below. Now let's just say you knew about Bitcoin, you were educated about Bitcoin, you understood the fundamentals, and you understood whatever was going on back in March 2020, which I'm sure you all know. Didn't actually affect the fundamentals, and also that there was a halving coming up, and basically you're like, yeah, I'm not going to sell, I'm going to buy. And let's say hypothetically on that day of that debt cross, you bought a Bitcoin. So you bought for about, what was it, $10,000? And sorry, you bought about $4,000 basically. You'd be up 376% today, or $29,000. Now, if you were to buy then, and we all like buy the bottom, sell the top, at the all-time high, you would have been up nearly 800%. So $58,000. So even if whatever Bitcoin you owned on that debt cross, if you did own Bitcoin back in March 2020 on that day that the debt cross happened, if you just basically held that, you'd be up, even with the correction, you'd be up 400%. I mean, that's a great return. So that's one reason I am not worried about this debt cross, and I think they're potentially a good thing because they can be used sometimes as buying indicators. Okay, good buying opportunities. Another reason is because I think we've shaken out a lot of the weak hands, so we're in this consolidation pattern again. Of course it can break down, but maybe we found a bottom. Maybe we've all the kind of weak hands and the people who've got in the last, a lot of people who have got in the last year have actually sold. And in fairness, if someone bought a Bitcoin for $10,000 or $4,000 and they've witnessed it going up to $64,000, $65,000 and it's crashed down to 30, a lot of people would have got out at 50, 40, 30 and just, and more power to them. But if you're in it for the long term, probably not. So that's the second reason. It could have shaken out all these weak hands. And the third reason is if you're dollar cost averaging, basically that €100 a week, or that $50 a month, or £500 a fortnight, whatever you're doing, whatever you can afford to lose, you're basically getting twice the amount of Bitcoin now because there's been a 50% sell-off. So there are three reasons I think that these debt crosses are not only not to be worried about, but potentially can be actually bullish events. Again, just my own thoughts and opinions, not a financial advisor. Do your own research. Never ever invest more than you can afford to lose. That's it for the episode. Okay, folks, that's the end of this episode. So if you've learned anything new or got any sort of value, you know what to do. Sláinte. Bye 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 bye.